Yo, what is good, boys? As you're looking at my screen right now, you're probably thinking, well, this isn't the usual. Because it's not. Alright, so I changed strategies. I'm back to what I used to trade a long time ago when I was a very early beginner trader. Back on ICT concepts. The model I was using felt very just up to the market. It was very wishy-washy. Wasn't actually structured right. Anyways, blah blah blah. You guys don't really care about that, right? I'm gonna show you guys how we took our trade today. Okay. We took longs on NQ and we won. We only hit TP1 though. So yes. Okay. So coming into the day, right? We have previous day high, Asia highs, London highs. I marked out this 1 hour gap because I thought we could come into it and then come down, right? Obviously, we created New York open high up here. We had all this low resistance draws on liquidity. We had all this low R, and we had sell side liquidity all the way down here. Previous day low was here. All that kind of stuff, right? And looking at, so long story short, first macro did not present anything to us, so I waited for the second macro. Yeah, I waited for the second macro. And what did we see in the second macro? We came down and we swept out sell side on ES and New York open low. Same thing on NASDAQ. And we also SMT'd these lows all the way over there. NASDAQ did sweep them, ES did not. Okay, so boom, I have my sweep on liquidity. All I'm waiting for is a market structure shift and a fair value gap to present itself, right? So come down, sweep these lows, come up, create this swing high, right? Then we come down, re-sweep these lows, come back up, and then close above this. Right, so we have a low, a high, a lower low, and then a higher high. That creates a breaker block. We also had a fair value gap in this. This was beautiful. This was going to be an A+ setup. Well, technically not. I'll explain why in a second. But this is the unicorn model, right? We have a breaker block and a fair value gap overlapping each other perfectly. You take your entry right there. Valid stop loss out down here. First take profit, first high in premium. And you hold the rest to buy side liquidity. Why did I not take this? Hold on, let's back up, my bad. So as we had our breaker block forming with our overlapping with our fair value gap, it's important to note that ES needs to do the exact same thing for me to take a trade, right? Not exact same thing. We just need a market structure shift and a fair value gap on ES, right? So as you can see, we created a high or a low, a high, a higher low, and then a higher high. That right there is not a breaker block, it's a mitigation block. Right, so mitigation block overlapping with fair value gap. This is great. Again, I don't trade ES, I only trade NASDAQ. This would have been your trade, right? Whatever, boom. But yeah, so we had our fair value gap and our market structure shift / displacement on ES. So, and then I had this on NASDAQ. The only reason I didn't take this is because we have not gotten our market structure shift yet. A lot of people, or some people, I honestly don't know yet, because I'm very new. Some people call this a market structure shift. Me personally, that's not really a good high. Like, this is not a good swing high to take or to close above. So I waited for price to create this swing high. Boom, so we created a swing high, displaced through it. And you remove this so it's a lot cleaner. And I can get rid of all this too. Alright, so we have a market structure shift on this candle and our displacement. We form a mitigation block. Why is this a mitigation block? Because we have a high, a low, a higher high. Hold on, my bad. A low, a high, a higher low, and then a higher high. That's our mitigation block. It is just under our fair value gap, So I have a sweep of liquidity, a fair value gap. I have the exact same thing on ES. This is the first presented fair value gap, so I take it off there. The second we get in here, I press buy. Valid stop loss is below this low because this is a breakaway gap. So this should be a protected low. We should not come back here. And first take profit was this first high in premium. As you can see, we took that, and at TP1, I always put stops at break even because, yeah, TP1 got hit, and then my break even got hit. My break even actually got hit right here on the next candle because of mine, because Top Step just loves it, right? Wouldn't have mattered anyways. We come up or we come down, hit break even, tap into this fair value gap again, and I honestly thought this was gonna hit, but it didn't. We come up and we tap into this little mitigation block right here, order block, mitigation block, whatever the fuck you wanna call it. I don't know, bro. There's so many different people who like identify them differently. I know it as this. We have a high, a low, and then a failure swing, right? So this high fails to take this high, this original high, so we have a high, a lower high, and then a lower low. If this high took this high and created a high, low, higher high, and then lower low, that would have been a breaker block. Yeah. To me, this is what order block is. It has to sweep liquidity, right? So we have a high, a low, a higher high, and then a lower low. This low sweeps out this low right here. That's an order block. And as you can see how price respects it, we tap up in here, boom, 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 bounce up and down off that, yeah. So yeah, that was the trade for today, guys. I did not take a trade yesterday, but the trade did play out in my favor to full TP. I think I can show you guys it actually. I'll probably have it in here. Oh goodness gracious. Of course. Yeah, so this was the trade yesterday. Why was this trade good, and why did I take this trade, and why was this trade valid? Boom, you see we swept sell side. No valid entry in the first macro, right? We have a clear drawn liquidity, right? So we swept out sell side. No valid entry in the first macro, so wait for the second macro. We're downtrending. I need a market structure shift and displacement. We get that, as you can see. We come up, we displace, and we create that market structure shift, and we create two fair value gaps. And ES did the exact same thing, I believe. Doesn't matter though, because we couldn't enter this because it was before our macro, so we had to wait until our macro came. We displaced even more, which was great. Honestly, looking back at this trade, this is probably the only reason I should have taken this, is the fact that we displaced past this. This is a continuation model. If I took it down here, it would have been reversal, but this is continuation, so I'm taking it up here. I'm talking a lot, I'm sorry. So boom, we displace even more, creating more fair value gaps. And as you can see, can I even zoom in? Okay, as you can see, macro is literally right here. So we displace right here, boom. We have this fair value gap down here, although we don't ever tap into it, and we create this fair value gap right before macro. So we have a fair value gap here, macro presents itself, I take it off the first presented fair value gap. We have all of our criteria hit. We have a sweep of liquidity, market structure shift on NQ and ES, and a fair value gap on NQ and ES. I entered the trade the second, we got into this fair value gap. Looking back at this trade, my stop loss should have been right here at this low, because this is a protected low. I believe so. Because we broke away from, yeah, this is a protected low. This is like an order block, mitigation block, whatever you want to call it. Why? Because this candle what's the word called? This candle basically consumed this candle, right? It completely closed above it and violated it. So this should be a protected low stop. Should have been under here, and I was targeting this high and this high. I had to give here for a 2RR. Obviously, I'm not taking that, right? If I was actually taking this, I'd hold it right here. And stop placement on this was not valid. It should have been right here. So yeah, those are the two trades. But this was the trade today that I actually took, and I will be taking these from now on. Yeah. So and yeah, what am I saying? Yeah. So that's it for you guys. See you guys not tomorrow. I see you guys on Monday. If and when we get a trade ski, there's going to be a lot less trade recaps now because my model is completely different. This stuff is not set up every day. But yeah, see you guys next week. Take the weekend easy. Have a good one, boys. Peace.